Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday. It's April 30th here. This week we got a pretty action-packed week this week. We got today, what you'll see coming up here is the Fed's favorite gauge of inflation, which is the PCE, or Personal Consumption Expenditure. We got job numbers coming out. So we have Wednesday the ADP, the weekly jobs number on Thursday, and then, of course, the Bureau of Labor Statistics job numbers on Friday. And then another important one will be tomorrow will be the beginning of the FOMC. They're going to begin their two-day meeting, which they'll give their announcement on Wednesday. So some pretty big stuff coming up this week here. So stay tuned. But right now, let's go over today's economic data. Excuse me. We had the personal income. So as you can see, back in February, it went up 0.3%. Forecast for March was supposed to go 0.4. It did go up 0.3, not quite as high as expectations, but still went up. Consumer spending, on the other hand, so we got people making money, now they're spending money. So basically, it was a nil back in February. It was forecast coming at 0.4% for March, and it did come in expectation at 0.4%. So people are making more money and spending more money, which helps the economy keep growing here. Personal consumption expenditure. This is for the month of March, and this is the PCE we're talking about, the Fed's favorite gauge for inflation. So we had a 0.2% growth in February, but in March, as you see, the forecast was zero, and it came in at zero here. Now, year over year did jump. It went from 1.8 to 2%. So we're kind of getting close to that target mark, that the Fed's favorite target of 2%. So and they usually look here at the core inflation here, which is when you strip out very volatile things like food and energy, we get the core inflation. So in February, it went up 0.2%. Forecast for March was 0.2, and it came up 0.2%. And this one jumped from 1.6 to 1.9%. So this is, we're again right at that Fed's favorite gauge of 2%. So this might start talk again in the markets regards to inflation, as well as the Fed, countering with the rate hikes here. So there's been talk about possibly 4 rate hikes this year. Instead 3, but this might raise that again. Chicago PMI. This is manufacturing numbers out of the Chicago region, and anything above 50 is considered expansion or optimism. And as you can see here, in March it was 57.4. Forecast was go up to 57.9, but it came in a little short at 57.6. So a little bit higher from the previous month, but short of expectations here. We also got pending home sales for the month of March. So these are signed contracts that were signed and going into escrow, or as we say here in California, escrow. In February, this is actually revised lower. It was revised down to 2.8% growth. So still pretty good number here, but again, it was revised significantly lower here. We were at 0.9% forecast for the month of March, but only went up 0.4%. And of course, now it's on a revised lower number here. The problem is, of course, we are lacking inventory. As you can see, the appreciation levels are going up, which shows that there's still strong demand. It's just that there's lack of inventory. So numbers like this pending home sales are down, or existing home sales and stuff are down. Overall numbers, total packages there, as again, we are lacking inventory here. So let's kind of jump over here to the headline news. Stock market's a little mixed. Dow's the only one that's up right now. The bond, we'll touch on that here in a second, but we're still getting earnings reports coming out here, but that, of course, that inflation data is probably the big one for the day so far today, coming out here. So when the inflation news came out, we were way down here. We were down about 6 basis points earlier on, but since it's kind of subsided, so we're basically at zero right now for the day from where we left off on Friday. There was a little concern here, with the PCE coming in. The reason why the PCE had that big spike was primarily because we had a number that was at negative. It pulled back from March of 2017, and since this is on a 12-month rolling calendar, that negative number dropped off, and basically it's all positive numbers across, and it just increased. So that's why there was a spike there. Nothing tricky in the numbers or anything, but yeah, that's why there was a spike there. And so far, it's kind of shrugging it off so far this morning. We'll see if it stays that way. And here's the, oops, sorry about that, Treasury yield. So it looks like we are starting to break below this. This could help out mortgage-backed securities here as it's breaking below this resistance. We're down to about 2.94%. And again, this could help mortgage-backed securities get a little bit more improvement. So if it can stay below this number, we have a lot of room here between the 50 and 25-day moving average where its next floor of support will be. And again, that could help mortgage-backed securities. As you can see, we got plenty of room up here till we hit the 25-day moving average as well for our next ceiling here. That could help out rates a bit here. All right, so that pretty much helps things out. Rates are about the same as where we left off. East Coast, they may have went up a little bit, primarily because of earlier inflections of where they were, the market was. But on the West Coast here, as the market's kind of simmered a little bit, and it's basically about zero. For the most part, it may come in, most likely will come in at the same price as what we saw at the end of the day, Friday. All right, but if you guys want to get more data, just come over to Twitter. You can find me on Twitter here, and you can get a lot more data that I like to produce throughout the day here. All right, you guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.